Hello, everybody. Welcome to Monday. The S&P 500 was up almost a 0.5% today. Finally back. Actually missed last week. I wasn't planning on that, but things happen. The market set a new all-time high on Friday. That was a kind of a big deal to finally break through. To have a nice run today is another kind of a big deal. Also, you really want to see this kind of get away from this kind of 6,200 level that, the record level that it's at and continue to go and maybe never come back. Because, if you break back down again, you're making a formation here that would not be a good thing. And of course, there's still always that possibility. We've got this tariffs that are sitting in front of us and different things along those lines that we have to wait and see, what actually happens. We have seen the continuation of the dollar continuing to fall. It fell a bunch more today. Seems to be revolving around this big budget bill, maybe moving a little bit farther down as far as that goes. We'll have to see what type of ramifications that has. But the Senate is working on this big bill, the big, beautiful bill, they're calling it, of course. And, the original bill that came out of the House was showing a $2.3 trillion deficit over that 10-year period. They've actually managed to add to it, which is different. Usually the Senate is going the opposite direction. But their new CBO, estimate is at $3.3 trillion deficit over the 10 years. So, the stock market isn't that concerned about the deficits per se up to a certain level, mainly because deficit spending is stimulative spending to the economy. Obviously, there's a level there that you can go that's too far, and that's really where you'd watch the bond market. The bond market's still doing okay here. There was kind of a big freak out in the bond market just prior to passing the bill at the House level some weeks ago when that 20-year bond auction went off, and it didn't go well. But we've had multiple auctions since then. They've gone quite well. And interest rates have kind of stabilized, at least somewhat so, even during this debates that they're having here in the Senate. So those are the things we look at now. Whether you like the tax bill or not, whether you politically think it's a good idea or not, those are a little different than how the stock market and the bond market might look at it. The bond market's going to look at that deficit and say, okay, you know, we have to come up with that money and continue to funnel, bonds out to the public in general and to the world to get sold. And the stock market, of course, is just looking at, how is this going to affect bottom line? And if consumers have, if they didn't continue the current tax brackets, which is the biggest cost of this whole thing, and we went back to our old tax brackets, what I've been reading is it'd be one of the largest tax increases in history. So I think, irregardless of which party was going to be in there was going to be a pretty strong desire to try to, continue these particular tax cuts that we already have. Now they've added some things and done some other things, as far as that goes. But the biggest bill in this whole thing or the biggest cost is the continuation of the current tax brackets. And so, we'll see how that plays out, over time as far as that goes. But I do think that, is probably not a bad thing. And the stock market would have looked at that negatively if we would have let all these tax brackets expire, just because now, consumers have less money, businesses have less money to spend, and more money going to taxes, basically going to the government, which can also spend, and they do help the economy, but they might not be as efficient to a certain degree. So anyway, that's what's happening today. Pretty interesting to see what's happening. The market has come all the way back, even in the face of, continued tariff, difficulties with Canada as of, basically Friday. Continued, issues with this pause that was done from the Liberation Day, comes due July 9th. And, talk about just sending everybody, a notice telling them what their tariff is going to be, which seems a little ominous to me because it's at 10% right now, which is pretty high. Our average tariff is in that 15 to 20% range across all products, which is really higher than it was in 1930. And so, you've got the scenario where they could go even higher as they send these out and say somebody's 25 or 15 or whatever. So, the market's kind of ignoring that. I guess the assumption is that either the tariffs aren't going to be, that dramatic in the end, or that they'll back off on those tariffs when they need to. So, we'll see how that plays out. But anyway, look forward to being able to see what's going to happen. Won't be here tomorrow, unfortunately, but I'll be doing a video on Wednesday and we'll see what's happening then. Thank you very much.